Good afternoon, ladies and gentlemen, and welcome to the latest edition of Tech Talk. It is Thursday, the 19th of April 2018. My name is Chris Conway. I'm the Chief Market and Trading Strategist here at Australian Stock Report. Before we get into the charts, as we always do, we'll take a quick look at the disclaimer. It essentially says that this presentation is general in nature only, and that before acting, you should of course take into account your personal financial circumstances. Any discussion of performance is not indicative of future performance. And if you would like to read the disclaimer in full, please pause the video now. Alright, as we always do, we'll start with the Aussie 200 forwards, otherwise known as the SPY. We'll have a look at it on an hourly time frame to start off with. And look, anyone who follows the commentary in the trading report would know that for quite some time we'd been suggesting that traders play this range, looking to buy at support and sell into these resistance peaks here. And then overnight, the market finally broke higher above this 58.50 resistance. And this morning, we were looking to be buyers on a pullback into the 58.50 to 60 region. Unfortunately, the index never did pull back. That was about the open there, and it's just pushed higher right from the outset. So we're more bullish on this one now that we've seen the breakout. As we zoom out though, we can see that there is quite a lot of price action above the current market price, and particularly that point up there around 5,900 is likely to act as resistance, given that it was support on multiple occasions on the way down at those points there that I'm highlighting. So I would say moderately bullish, not outright bullish, but certainly the expectation is that if all things remain the same, this market can push up to 5,900 on the SPY. We'll look now at the same market on the 2-hour time frame, just highlighting today's price action. That was the 950 open there, and as I said, it just went straight high from the outset. We were looking to buy in the 58.50 to 60 region. The low was at 58.65 at around 11:30. So our order expired at midday. It was a good till midday order. But ultimately, as I said, it was not filled. The market bias indicator on the Australian equities section of the trading report is at high risk and neutral, and we had been that way, again just looking at this hourly chart, because the market had been grinding sideways. Obviously there was that spike lower there, but had recovered and was just grinding sideways. And there was no real trend to speak of in the market more broadly. And when there's no trend, us as trend traders, we consider the market as high risk. When a market is trending strongly, we consider it low risk, because the market is moving in the direction that we want to take trades. So just a bit of insight there as to how and why we come to the setting that we do on the market bias indicator. Now that the market has broken higher, we might ratchet it up one notch to being moderately bullish, and having a slightly bullish skew in terms of how we would look for trades or structure a portfolio. So as I said, just wanted to give some insight there as to how we come up with those settings. We'll move right along now to the Aussie dollar. Obviously went through this downtrend here, but has rallied back to the 78 handle, and I think last time I put one of these videos out, I said you'd probably be looking for strength into the 78 region as an opportunity to be a seller. The price action is just hanging around there, and these EMAs are tightly packed together. So again, right now there's not a great deal of trend to speak of, and that's evident in the fact that we've had these fairly stubby candles through this almost 2-week period here. But if you were to see a big red candle rejecting away from the 78 price point, then that would be your signal to take on shorts, because the assumption is that it would be a resumption of this prior downtrend. So you're looking for a candle probably that sort of size there, a nice kiss off the 78 handle, I guess you'd say. And as I said, that's your signal to take on fresh shorts. So anyone who's looking to trade the Aussie, that is something to certainly be on the lookout for. Euro dollar, this one is grinding sideways. The EMA is tightly packed together. I don't really need to say anymore. The broader trend is more bullish, but this market is doing nothing here. That's not tradable price action as far as I'm concerned. So as I said, we move along. British pound versus the US dollar. Made it up to resistance, slightly eclipsed this peak here, and then has rejected it fairly emphatically, and is now back at the midpoint of you know, what I would call a range now between this resistance point and support down here at 1.4. So, you know, you could be a seller from current levels looking to target a move back into 1.4. The more conservative traders would either wait for another retest of resistance or another retest of support and then trade accordingly. But if you're aggressive, like I said, you could just sell at the midpoint here, looking to capture further weakness. The dollar yen is the other currency pair that we have a look at. Again, last time out, I'm pretty confident. I said, you know, you're looking to sell strength back into the 108 handle. You know, it sort of happened there. There was a rejection and then a couple of weaker sessions, but it didn't really obviously follow through to the downside. So again, you're waiting for it to press up towards 108, maybe even push higher, and then, you know, a rejection, and you sell the rejection. But that one needs a little bit more cooking before, you know, you take on any trades in the dollar yen. To regional markets now, the Hang Seng. I've redrawn this downtrend resistance line just to highlight these lower peaks, you know, that are you know, and the fact that this downtrend resistance line is really sort of funneling the price action lower. Of course, you've got a big round number support there at 30,000, and obviously you've got some further support down down lower at sort of 29,400, let's call it. So some opposing forces in play there. And ultimately the EMA's, you know, tightly packed together. So there's no trade here right now, but there's a couple of things that could happen. You could see a sharp break lower, and obviously that would be a go with move, and you'd be a seller. You could see the price action spike above this downtrend resistance, and then you'd be looking for a pullback into that downtrend resistance line and look to be a buyer. So I'll just draw that. So if we extend that there, you know, if you were to see a spike higher, you don't buy that initial spike. You wait for the price action to come back and retest and, you know, confirm support at that point there. I'm trying to draw an X for you. Hopefully that's close enough. But you would buy that retest and confirmation of what was previously downtrend resistance, now providing support on the way back up. So that's a potential, pardon me, a potential setup there. But again, as I said, on the last chart, this one needs a lot more cooking as well, but it's just, you know, market maps. That's what I try and provide through these videos, is just providing market maps of what might happen and hopefully giving you some insight as to what you could do should that market map play out. Of course, if it doesn't play out, well, I'll do another video next week and we'll be back to the drawing board. To the Japanese market now, if I can find the chart, just bear with me. There it is there. Looking more constructive, but still too messy, this one for me, so that's an avoid. And the German market, the DAX, similar sort of story, you know, big wipeout, just been mucking about sideways, starting to look more constructive, but needs to do some more work before you have a bullish bias, or I have a bullish bias towards this market. The S&P 500 in the US, similar sort of story, just, you know, basing out. Obviously some big support down here, but a bit of work to do before it clears, you know, these peaks here. So again, just sort of in no man's land, and when a market's not giving you a clear opportunity, it's an avoid. It's pretty simple. To some commodities now, nice bounce in iron ore overnight. I have been saying for a while now, you know, obviously clear support down here. If you see a signal, then, you know, potentially jump on board. Would have been nice to catch this move here, and you could have if you took that signal, but, you know, this is still, take these two candles combined, that's still a signal. So we could trade back into this 500 handle, a bit more upside on offer there for anyone who's willing to take on the risk. Obviously you're placing a stop just, you know, obviously below this support and below those recent lows. Oil, I continue to talk about this one. I continue to be bullish. I have said, you know, I wouldn't be surprised to see oil in the high 70s, or even with an 8 handle at some point throughout this year. I said this very clearly in the last video. I'm bullish on this market. I like the fundamentals. You know, again, OPEC coming out overnight saying that they're going to try and continue the production cuts. You know, there seems to be a lot of positive catalysts in this market at the moment, and the thing that we must always remember, particularly with commodities and even more particularly with oil, is that these markets tend to overshoot. So they tend to overshoot to the downside when there's negative sentiment, and they tend to overshoot to the upside. So not only have you got fundamentals that I think are supportive, but you've got a tendency for this market to run probably longer and harder than, I don't want to say a typical market, because what is a typical market, but say an equity might, once it gets its momentum up. So do with that what you will. Again, targeting sort of mid 70s to 80, there's still room in this one as far as I'm concerned, but given that it is getting close to 70, you might wait for a bit of a pullback if one comes, and use that as an opportunity to jump on board. What I see as a really strong trend, and a trend that can continue. Finally, gold. This one is getting up towards resistance, 1360. This one is still a range trade. If it gets up here and prints a sell signal, take the opportunity to short it. And if it gets back down to these sort of 1300, 13,510 region, that's your region to be a buyer. Alright team, that wraps it up. Thanks for watching, thanks for listening as always, and I look forward to talking to you again soon. Until then, please take care.